Jayant Acharya, the Joint MD and CEO at JSW Steel, joining in on the show right now. Jayant, hi, good morning. How is it that you're assessing the macro environment right now, both in India and the export markets, given the recent stimulus measures from China, which failed to kind of move the needle?
So the global environment, as you know, has been soft, although the IMF latest numbers are still reflective, stable global growth. US, I think they've upgraded a bit. Europe is slightly weak, but I think with the change of the rate cycle now, reduction of interest rates, that should be positive, supportive for growth. China, the stimulus announcement has been positive, well taken. Although I think not yet enough, but people are expecting that the activities on ground will improve and they will do some more announcements as we go ahead. The commodity prices did react in reaction to the China stimulus announcement. Steel prices also, moved up as well as raw material prices. So I think we'll have to monitor how that impacts the domestic demand in China and how it results into some moderation of exports, which they have been doing, which is impacting the steel industry at large.
Right. What about the demand environment, both in India as well as globally? Do you maintain the 27 million ton volume target for FY25?
Yes, we expect the second half to be better than the first half. Number one reason is that the second half is usually a stronger second half in India. Post-festive seasons, post the monsoon, and this time the election as well. We expect that demand in India will pick up. We are also, we have commissioned the blast furnace in Vijayanagar. The BPSL capacity expansions have been completed. So the new capacities are coming on stream and they will ramp up during this H2. So our volumes will certainly be better on the back of a good demand in India. We have seen a strong demand in H1 as well. So we should do better from a volume perspective. We stand by the guidance which we have given both on sales as well as production for this financial year.
Right, and for FY26, will 8 to 9% volume growth be a fair ask?
So as we see now, I think we have seen a growth of about 13.5% in H1. Our sense is that probably between 10 to 11% is what we will end this year, probably in the vicinity of 150 million tons of demand is what we will see for the financial year as a whole, FY25. Going into FY26, my sense is what I mentioned earlier, about 8 to 10% growth is something which is very much doable. Typically, if the economy grows at 6.5 to 7%, then a growth of 8% in steel with an elasticity is easily possible in a growing nation like ours. So that's a doable range.
Right. Also, Mr. Acharya, realizations have declined about 8% on a year-on-year basis, led by lower steel prices, both flats as well as longs. But when is it that you expect steel prices to actually make a comeback and recover?
China stimulus announcement, the prices internationally went up. It went up in China, then internationally and in other markets as well. We have seen the prices in India also bottoming out in September and going up in October. Prices went up in the range of 1,000 to 2,000 rupees per ton for flats and longs, respectively. I think we are seeing, I would say, reasonable price levels now because the price drop over the last few months has been quite steep. Going forward, we see the benefit of a slightly improved price and lower cost, specifically on account of coking coal. Though iron ore, in terms of cost, went up in India, which I think also will taper down because I don't think this level of iron ore cost in India is sustainable. So therefore, from a cost point of view and some improvement in the price, I think we will look at better spreads for Q3.
The industry is seeking higher duty on imports from China, and the steel ministry believes seeking doubling BCD to 15% from 7.5%. Probability of this is being implemented by finance ministry. If that happens, what could be the impact?
see, different China's exports in this 9 months of the calendar year has been 84 million odd tons. It has gone up more than 20%. That has rattled quite a few countries, and many countries have taken steps to safeguard their shores, and they have raised anti-dumping, safeguard, and various other measures to control the inflow. We are engaging with the government of India to provide a level playing field to us, because some of the steel which is coming into India is below the variable cost, as we understand, and that calls for trade action. BCD is one of the ways to do it. There are other ways to do it. And the Indian government has initiated some anti-dumping measures on some products in the past few weeks. And we are engaging with them. We are hopeful that the government will look at these requests positively.
Update on NMDC and Vedanta steel assets?
NMDC, I think we are still waiting for any formal announcements to come through. As and when the announcements for starting the process comes back, we will look at a strategic fit and then take a view. We would remain interested. We will be looking at the asset if it comes for a process.
All right, so appreciate your time. Thank you for joining us. And